Let's talk a little bit about the fundamentals behind the technicals in terms of what we're seeing here. I've got Chief Market Analyst, Phoenix Financial Services, joining me. Wayne Kaufman's with us. Wayne, good morning. Let's talk crude. Good morning to you. Largely shrugging off the WTI, that is shrugging off that dollar run-up we just looked at this week, back above 104. Energy markets seem to have bigger fish to fry.
Pretty much you summed up the dollar perfectly. Not much, not much for me to add there relative to the dollar, other than on the daily charts, it's getting a little bit overbought. And you're 100% correct. The historical correlation between the dollar and commodities, especially or specifically oil, is typically an inverse, and we're not seeing that. The oil and the dollar have been rising together the last couple of weeks. And I think the simple part of crude oil is that we're still, at least in the short term, in an oversupply situation. And the number one reason for that is probably Russian supply, which people thought was going to be coming off the market because Vladimir Putin was supposedly going to be doing cuts. Those cuts have not materialized. In fact, there's more and more Russian oil entering the market. So if you combine that with the lack of a robust economy in China, which everybody was expecting, then it just adds up to an oversupply situation for crude. So we did bottom in early May around $68, and we've bounced this week to just under the bounce right up to about the 50-day moving average. And yesterday we dropped. We're trying to hold that 20-day average. And I think another issue about the rise that's going to be hard to say if it's temporary or not until we get through it is the Saudi oil minister or the Minister of Energy warned speculators recently ahead of OPEC's meeting, which is June 3rd and 4th. So we saw a bounce in oil there. So whether or not that's just people shorts looking to get out of the way ahead of that OPEC meeting, or if it's just that we're going to settle into a range. I kind of think the range thesis makes a little bit of sense, because when I look at the COT, the CFTC Commitment of Traders reports, it's pretty bullish relative to the commercials, the so-called smart money. And when I look at the currencies that are petroleum related, or at least commodity related, the Canadian dollar in particular, which we know is petroleum related, that the futures traders are bullish on the Canadian dollar. They're also bullish on the Australian dollar, which is very commodities. Australia, their economy is extremely commodities related. So I do think that there's a good case for a sideways range here for a little bit, but we do need to get past that OPEC meeting and see what they have to say.
I like that, Wayne. It kind of feeds right into my next question here now that I think of it, because I've got a couple charts here I want to show as I offer this up to you. Here's the Canadian dollar you just spoke to, very much range bound, contained. I've got to look here at dollar here on a longer term. 104 right now puts us back in the middle of the range that we established last year. We bottomed out 94 all the way up to 114. So you can see very much contained and range bound. And then I also just want to look at crude here in a very similar pattern. I mean, one could argue range bound, contained. And then, you know, as I look at these charts, I'm reminded of how, you know, this week you mentioned the Saudi comments here, and we definitely saw some intraday volatility associated with the spike to 74, the warning for short sellers to watch out, follow through very much limited. Market, it seems to be telling us, one, that talk is cheap, or are we just seeing what you were kind of talking about, a reflection of how, well, recently in terms of price activity, there's a lot of intraday opportunity, but not a lot of longer term follow through or well-defined trend type price activity playing out?
We're seeing a lot of interesting issues throughout the whole commodities complex. We're seeing a lot of weakness. You know, gold has come off tremendously. Diesel fuel just made a 52-week low on Tuesday. Copper trading back to levels last seen in November. Even lithium, which, you know, from a headline point of view, what's hotter than lithium with all the talk about electric vehicles, especially electric vehicles in China, and lithium prices have just been terrible. North American fertilizer prices, a 52-week low just the other day, and the indexes, the indexes of commodities, the U.S. spot commodities just made a new low. Raw industrials just made a new low, and we're seeing corn and soybeans and wheat very soft. Container freight rates out of China, very low numbers there. So we're seeing a lot of interesting things happening throughout the commodities complex, and it makes, you know, the whole financial markets complex is very strange right now. As you were talking about with Kevin, you're seeing, you know, the AI pushing up certain equities, but most stocks are still in long-term downtrends. So it's really a very, very difficult and rough time to analyze financial markets right now.
Let's just take a quick look at a couple charts to provide some visuals to Wayne's points there. I did notice diesel, heating oil coming off here significantly. I mean, if higher today, 2 in a row, but this comes after, it looks like, a 5-day slide. We're talking 8 of 9 to the downside here before recovering yesterday positive for the first time again in 5 sessions here. But I also wanted to take a quick look here at what's going on in terms of, let me show you what's going on with copper here, below the 50-day moving average. To your point, in terms of electrification, you would think it'd be a little bit more supported. Silver also, I saw, breaking down below the 50-day moving average. Wayne, how much attention did you give to the large draw that we saw from the EIA this week, down 12 million?
Honestly, not that much attention to it.
Too many other things going on.
You know, the debt ceiling is front and center.
Yeah.
And the what's been going on in equities with market breadth just continuing to deteriorate. And then we had the NVIDIA AI thing, which, you know, was fantastic if you're in tech stocks. But, you know, it's funny because classic diversification actually hurts your portfolio right now because we've got such a bifurcated market. But again, going back to energy, all the energy numbers, whether it's you know, crude oil, heating, diesel, gasoline, natural gas, they're just all weak. Natural gas tried to put in a bottom and started to rally, and then it got knocked back down pretty hard. So it's very difficult right now for commodities traders.
Talk lastly about something I noticed, natural gas. Europe, their price levels, June 2021 levels, which kind of ties back to that comment you mentioned from the, that came from the Qatari Economic Forum this week in terms of the Saudis warning short sellers. But I think it was the Qatari energy minister who was talking about how, well, energy prices and that fact that they fell this last year, I should say, saved Europe. He said they saved humanity for that matter, but really warned about ultimately higher prices next year and potential for the impact that that could have on the economy.
You know, the European economy was doing very well. European stocks, up until just really this week.
Yeah, the DAX a new high. New all-time high, yeah.
Exactly. So obviously, and they have much higher natural gas prices over in Europe than we've got here. And they unfortunately allowed themselves to fall into the hands of Vladimir Putin relative to natural gas supply. So yeah, it would be a very bad thing for the European economy should energy prices spike up like that. But I'm not sure I'm ready to buy into any predictions that are 6 or 9 months out.
And, we tied that decline in energy prices and that price activity to what we saw in terms of the recovery of the euro, the weakening of the dollar, ultimately, which speaks to the intertwinedness of all of these markets. And Wayne, we appreciate you joining us, sharing part of your Friday and ending your week with us here on the TD Ameritrade Network. Thanks to you, Wayne. Wayne Kaufman, Chief Market Analyst at Phoenix Financial Services.